Hey there. Ready to unlock the secrets of commercial real estate investing?
Oh, always. I'm ready to learn.
Well, today's deep dive is all about giving you a crash course in that world.
Okay, love that.
We're pulling from a YouTube audiobook and an ebook, both called Commercial Real Estate for Beginners.
Makes sense. Gotta start somewhere.
The video is a really cool mix of inspiration and practical advice.
Like how-to stuff.
Exactly. It walks us through the author's journey to, actually making it big in real estate. And then the ebook, that's where it gets really hands-on, detailed examples and actionable tips, things you can actually use.
Sounds like a good combo. Kind of like a pep talk and a toolbox all in one.
Exactly. And the author, Peter Harris, this guy has quite a story.
I'm intrigued.
So he wasn't always like this real estate mogul, rolling in dough. He started out as an engineer.
Okay, wait, an engineer, not the typical real estate tycoon origin story.
Nope, not at all. He's in Silicon Valley, actually.
Oh, wow, even more unexpected.
Yeah. And on the side, he was dabbling in real estate, just starting out with single-family homes.
Okay, so dipping his toes in. We've all been there.
And there's this pivotal moment. He's like knee-deep in renovations, totally burnt out from juggling multiple property.
Been there. So many late nights dealing with contractors.
Oh, yeah. The joys of homeownership. Right. But anyway, that's when the light bulb goes off.
Aha moment. I love those.
He's thinking, what if I could simplify things? Put all my rental units under one roof.
Makes sense. Streamlining, efficiency, those are good things.
But it wasn't just about efficiency, though.
Oh. What else was going on?
So around the same time,
Yeah.
his boss at the engineering firm gets laid off.
Oof. Not good. What happened?
Replaced by someone younger.
Ah, I see where this is going.
And cheaper, of course. You know how it goes.
Yeah.
And that was a wake-up call for Peter, like shook him to the core. He realized relying solely on a job for financial security.
Yeah, it's like building a house on sand.
Exactly. And for Peter, that safety net, that solid ground, became commercial real estate.
I like where this is headed, but I'm guessing he didn't instantly become a real estate superstar, right?
Not quite. In fact, he has this really humbling encounter with Robert Kiyosaki,
Wait, the rich dad, poor dad guy?
the one and only.
Yeah.
They were playing liar's poker.
Okay, now I'm really curious. What happened?
So Kiyosaki basically calls him out, says he's playing it too safe, not thinking big enough.
It's that tough love that sometimes you need to hear, you know? Like a push to get out of your comfort zone.
Totally. And Peter, he took it to heart, went back home, determined to prove Kiyosaki wrong.
I love that. So what did he do?
He sold a couple of his single-family homes, one's actually making good money, and used that to buy his first apartment building.
Okay, bold move. How big are we talking?
This was a 45-unit building near a major university.
Wow, that's a pretty big leap from single-family homes. He went all in.
He did. Location was key, though. He knew that.
Mm-hmm.
The area was good, close to the university, not like, on a street with a ton of undergrads.
Makes sense. Target market is super important in real estate.
He was aiming for grad students and staff, fewer of those stereotypical, student living headaches.
Smart. Less turnover, more reliable tenants.
Oh, and he made a good choice with property management, too. Hired a mid-sized company. Found that sweet spot between having the expertise and keeping costs under control.
That's a valuable lesson. Knowing when to delegate is huge.
And remember how Peter was like totally jolted by that layoff at his engineering job?
Oh yeah, that was a turning point.
He took Kiyosaki's challenge seriously. He calculated his rat race number, the minimum he needed to cover his monthly expenses, literally taped it to his fridge.
A daily reminder. Love it.
And with the cash flow from that 45-unit building, guess what? He achieved it. Declared himself officially out of the rat race.
That's the dream. Financial freedom to design your life how you want it.
Exactly. But it was more than just the money. Reaching that financial freedom gave him something priceless: time. He was finally able to spend mornings with his son,
Ah, that's beautiful.
driving him and his friends to school, something he couldn't do before because of that demanding job.
There's a beautiful irony there. He sets out to achieve financial security and ends up with a richer, more fulfilling life overall.
Absolutely. Money's just a tool, right? It's about what you do with it.
Couldn't agree more.
And, this is just the beginning of his journey. He goes on to buy 2 more apartment buildings, starts raising private money to fund even bigger deals, and eventually he becomes a mentor to other aspiring investors.
That's inspiring. From engineer to real estate mogul and then helping others do the same. It's a pretty amazing story. You know what's funny, right? Warren Buffett, one of the most successful investors ever, advocates for this surprisingly simple approach.
Keep it simple. I like it.
Invest in what you understand.
Yeah, makes sense.
But he really stresses two key elements:
Okay. It
predictability and control.
makes sense on the surface, but when we're talking commercial real estate, like how much control can you really have?
That's a good question, right?
It's not like picking stocks. You can't just like sell when things go south.
You know what's so interesting about commercial real estate?
Right.
You actually have like a remarkable degree of control. Think of it like 6 different levers that you can adjust to directly influence your returns.
Okay, I'm listening. 6 levers, huh? I gotta know more.
All right, so imagine this.
Okay.
You own an apartment building.
Okay.
You control the income.
Oh, so.
You can strategically raise rents.
Yeah, as the market allows.
Exactly. And you control expenses, making
right.
smart decisions about maintenance, utilities, the whole shebang.
Okay, that's 2. What about the asset itself? Like you've got this building. What control do you have there?
You have the power to sell the property when the time is right, or refinance it to tap into equity,
Oh.
or
well,
adjust your financing terms. And speaking of financing,
Yeah.
debt, you control the debt too. Okay, how so?
by choosing loan terms that best suit your strategy.
That makes sense. Okay, that's 4 levers. Give me the last 2.
Property management.
Right.
You choose oversee the property management company. So you've got control over how things are run day to day. And finally, insurance.
Right. Gotta have that.
You select the coverage that protects your investment.
So it's not just like a passive investment where you sit back and just cross your fingers hoping for the best.
Not at all.
You're actively involved shaping the destiny of your investment by managing all these levers.
Exactly. It's all about minimizing uncertainty.
Okay. Yeah.
Minimizing that risk. You're not just riding the waves, you're steering the ship.
Okay. I see the appeal,
Uh-huh.
but I bet there are tons of myths out there
Oh, yeah.
that keep people from even considering commercial real estate.
Totally.
Like you need to be a millionaire to get started.
Yep.
Or you have to have a perfect credit score.
Those are some big ones.
Right.
But Peter's story,
Along with the insights from this ebook, it debunks those myths.
okay, good, because they're intimidating. So what is the truth?
You don't need to be wealthy to get started.
Oh.
There are some creative financing options.
Like what?
Seller financing, master lease agreements.
Oh.
These can open doors even if you don't have a ton of cash up front.
That's encouraging.
Yeah.
But even if you can clear those initial hurdles, the whole process can just feel so daunting.
I get it.
Where do you even begin?
Yeah, it can be overwhelming.
Are there like certain habits or mindsets that successful commercial real estate investors, share?
That's such a great question. And you know what? The ebook outlines 7 key habits.
7. Okay, lay them on me.
First one, and this is crucial, focus.
Focus on what?
Instead of trying to be a jack of all trades in real estate, become a specialist.
In one particular area.
Yes. Master a niche, become a go-to expert for that type of property.
Okay, focus. I like it. What else?
Understanding your risk tolerance.
Oh, that's important.
Real estate, it's a long game, right? You need to be comfortable with the level of risk involved.
Right. Don't jump into something that's going to keep you up at night.
Exactly. Don't let fear paralyze you, but don't be reckless either.
Words to live by. Okay, what's number 3?
Building systems.
What do you mean by that?
Successful investors, they create efficient processes for everything. Finding deals, managing properties, handling finances.
So, streamline. Make things run smoothly.
It's about working smarter, not harder.
I like that. Okay, what about the rest of those habits?
This one's big. Patience.
Oh yeah, patience is a virtue.
Building a successful portfolio takes time.
No get-rich-quick schemes here.
Nope. It's about strategy, nurturing those investments, letting them grow over time.
Easier said than done sometimes, but I see your point. Okay, we're at habit number 5. What is it?
Partnering?
Oh, interesting. Collaborating with others.
Exactly. Understanding that you can't do it all alone.
Makes sense. 2 heads are better than one and all that.
Yep. Building strong relationships with mentors, advisors, other investors. And then accountability.
Yeah, got to stay on track.
Holding yourself and your team accountable for reaching those goals.
Love it. Okay, last habit, number 7.
Protection. Making sure your investments are, legally and financially sound. Protecting your assets from potential risks.
So it sounds like these 7 habits, they're the foundation for success.
I'd say so, yeah.
But I'm curious about the specific types of properties out there. What are some of the opportunities highlighted in our sources.
Oh man, they cover a wide range.
From
From familiar to more niche. Let's say you're intrigued by all this, but wondering what your options are.
Yeah, what are my options?
There's a buffet of possibilities out there, each with its own unique flavor.
Okay, I'm hungry. What's on the menu?
First up, the classic apartment complexes.
Always in demand, right?
Especially now. With more echo boomers choosing to rent instead of buy.
Plus commitment, right?
Exactly. Less hassle, more flexibility.
Okay, what else?
Office buildings. Those are a solid option.
In what way?
They often come with something called triple net leases.
Okay, triple net. What's that?
It means the tenant covers expenses like property taxes, insurance, even maintenance.
Oh, wow. That sounds pretty appealing from a landlord's perspective.
Truly passive income stream right there.
Okay, so we've got apartments, office buildings.
Yeah.
What about retail? That seems like it could be a bit more, volatile with all the online shopping and everything these days.
It can be a little trickier, yeah, but still lots of opportunity.
Like what?
You've got anchor tenants, those big box stores, right?
Right, the ones that draw the crowds in,
Then you've got smaller shops.
mom and pop type places.
Yeah, catering to niche markets. And then there are freestanding pad sites, great visibility for certain businesses.
Okay, it's like a whole ecosystem.
It is. And we can't forget about self-storage.
Oh, yeah. People are obsessed with storage these days.
It's a booming niche.
Hmm.
Everyone needs a place to put their stuff right.
Especially if they're downsizing or moving. What else is out there?
Industrial properties,
Like what?
warehouses, distribution centers.
Oh, yeah, with all the e-commerce these days.
Exactly. High demand for those. And then you've got hotels, motels.
Hospitality, that's a whole other world.
More hands-on, but the potential is there.
Okay, so many options. But I'm guessing not all of these require you to actually buy a whole building.
You're thinking about REITs.
REITs, yeah.
Yeah.
But also, like, TICs and, all this real estate crowdfunding that's happening now.
Those are all great options.
Are those legit avenues for someone who's not ready to, take out a massive loan and buy a whole property?
Absolutely. REITs, those are real estate investment trusts.
Right.
They're kind of like publicly traded companies. They own, manage a bunch of properties.
Okay.
You buy shares and boom, you're exposed to the market without the hassle of direct ownership.
Okay, so that's more of a hands-off approach.
Exactly. What about TICs?
Yeah, I've heard that term, but never really understood what it means.
It stands for tenancy in common.
Okay.
It's a way to co-own a property with other investors.
Oh, interesting.
It's good for pooling resources, investing in bigger projects that you might not afford solo.
Okay, yeah, that makes sense. So REITs and TICs offer different levels of involvement. What about crowdfunding? Is that a legitimate way to get into commercial real estate?
It's definitely gaining traction.
Yeah, I've seen a lot about that online.
So the JOBS Act of 2012, that kind of opened the doors for online platforms to connect investors with projects.
Oh, so it's like Kickstarter, but for real estate.
Exactly. You can invest smaller amounts and diversify your portfolio, get into a wider range of projects.
Okay, so we've got a pretty good overview of the different types of properties and ways to invest. Now let's get practical. What tools do you actually need to get started?
It's simpler than you might think.
I'm picturing elaborate spreadsheets, fancy software, a team of lawyers on call.
You don't need all that.
Oh, good.
The sources emphasize, the most essential tools. They're basic.
Okay, like what? A computer for research?
Makes sense.
A phone to connect with people? A basic calculator for crunching numbers?
So I don't need a private jet.
Nope.
That's a relief. But I imagine there's more to it than just the tools.
Oh, for sure.
What about insider knowledge?
Yes.
Strategies.
Absolutely.
How do you gain that competitive edge?
Yeah.
Get ahead in the real estate game? So, insider knowledge, strategies. Tell me more.
It's not really about secrets. It's more about becoming a real estate insider.
Okay, what does that even mean?
Someone who's plugged into the heartbeat of their community.
Okay.
Understanding those local zoning regulations.
Right.
Attending those city council meetings.
Okay. Yeah.
Building relationships with officials.
So you're saying it's not just about, crunching numbers,
No.
analyzing spreadsheets.
It's more than that.
You got to be out there, in the field, getting a feel for what's happening.
Exactly. Imagine this.
Okay.
You're at a city planning meeting, right?
And they're talking about this new development that's going to revitalize a certain neighborhood.
Right.
While others see construction, disruption,
Yeah.
you see opportunity.
Because you understand that, rising tides lift all boats. if the area is improving,
Exactly.
property values are probably going to go up.
And if you get in early, before the boom, you might snag a property at a steal.
Okay, yeah, that makes sense. That insider knowledge can be really powerful.
It can. So let's say you've identified a potential deal. How do you analyze it?
That's the million-dollar question. What numbers do I need to be looking at?
The audiobook, it breaks it down into 3 simple steps.
Okay, I'll
Of
accept
course,
it.
what's the income per year?
All right, income. Got it.
What are the expenses per year?
Okay, expenses, yeah.
And finally, what's that debt service per year?
Okay, so you're basically subtracting those expenses and debt service from the income.
You got it.
That gives you the cash flow.
Right. And in this case, the cash flow is about $24,628 per year.
Okay, so positive cash flow, obviously that's what we want.
Definitely.
But are there other metrics I should be, like, paying attention to?
Oh, absolutely. The sources lay out 4 guiding principles.
Okay, 4 principles hit me.
First, that positive cash flow we talked about.
Right.
Then, double-digit cash-on-cash return,
Okay.
a cap rate of 8% or higher,
Okay.
and a gross rent multiplier of 9 or lower.
Whoa. Okay, that's a lot to digest. Can you break those down for me? Like, what do those terms even mean?
Sure. So think of cash-on-cash return as like the annual return you're making on your down payment.
Yeah.
So a double-digit return means you're making at least 10% on that money every year.
Okay, that's good, yeah.
What about cap rate?
Yeah, cap rate, I hear that term thrown around, but I'm never really sure what it actually means.
Think of it like a price-to-earnings ratio, but for real estate.
Okay.
It helps you compare different properties by looking at their net operating income in relation to their market value.
Oh, a higher cap rate is better?
Generally, yeah, suggests a better potential return.
Okay. High cap rate, good potential. Got it.
Hmm.
And lastly, gross rent multiplier.
The GRM, right?
Yeah, what is that?
It's a quick way to assess the value of a property. It compares the market value to its gross annual rental income.
So the lower the GRM, the better.
Yeah, think about it. You're paying less for every dollar of rent the property generates.
Okay, so these 4 principles, they give me like a framework
Exactly.
for evaluating these deals, but I have a feeling real-world deals, they aren't always so, clean and straightforward.
Right. And that's why the ebook, it includes 3 detailed examples
Okay.
of property analysis. They highlight those nuances, red flags that investors need to watch out for.
Okay, red flags. Give me some examples.
In the 20-unit apartment building example, the expenses seemed really high.
Oh.
It turns out the live-in manager wasn't paying rent,
Oh.
which skewed the calculations.
Oh, wow. Okay, so it's really about, like, digging deeper,
Yeah.
looking beyond just the surface number.
Absolutely.
What other red flags did they uncover?
The Delaney Plaza Shopping Center, that one had some lease expirations coming up.
Okay.
Plus, a big chunk of the land wasn't even being used.
Oh, wow. So you'd have to, like, factor that in.
Definitely. And then the third example, the distressed 80-unit complex.
Okay. That sounds a little scary.
Yeah. This one was a mixed bag, partnership issues, high vacancy rates, deferred maintenance.
So not great.
And the owner wasn't even willing to share financials until an offer was made.
Oh, no. Red flag city.
It definitely had its risks, but it also had huge potential upside.
Okay, so high risk, high reward.
Exactly.
You'd really have to do your due diligence there.
Absolutely. Which brings us to another crucial part of all this, leases.
Yeah, the leases. They can be tricky.
Especially with retail, understanding those commercial leases, it's critical.
In what way?
They determine your income, your potential risks. Remember we talked about triple net leases earlier?
Yeah, where the tenant covers most of the expenses.
That's the one. But there are other types too, like gross leases where the landlord covers most expenses.
Okay.
And then net leases, which kind of fall in between.
Right, so many different types of leases, and I'm guessing they're all full of, like, legal jargon and complex clauses.
They can be, yeah. And commercial leases, they're way more complex than residential ones.
I bet.
You've got things like percentage rent, rent bumps, use clauses, exclusivity clauses, options for assignment and subletting, and even ADA compliance.
Wow, okay, it's a lot.
It is. So here's the key takeaway.
Okay.
Don't try to navigate this alone. Get some legal advice. When you're reviewing those lease agreements,
Okay.
an experienced real estate attorney can help you avoid some costly mistakes.
Okay, that's great advice. So as we wrap up our deep dive here into commercial real estate investing,
Yeah.
what are some key takeaways you want our listeners to walk away with?
First, commercial real estate. It can be a fantastic path to financial freedom. More control and predictability than a lot of other investments.
Okay, and
You don't have to be a millionaire to get started. With the right knowledge, anyone can get involved.
right.
Due diligence is key.
Always.
Understand the numbers, analyze those deals, scrutinize those leases, and don't be afraid to get expert advice.
Okay, I love it. And remember, folks, this was just a deep dive, not a comprehensive guide.
There's always more to learn.
So here's a final thought for you all. Imagine yourself 5 years from now, you've achieved financial freedom through strategic commercial real estate investments. What would your ideal first property be?
Ooh, that's a good question.
Keep that question in mind as you continue to explore this world. The resources mentioned in our sources, like Peter Harris's website and the National Association of Real Estate Investment Trusts, those are great places to continue your research.
Yeah, they are.
All right, that's it for today's deep dive. Thanks for joining us.
Happy investing.